right. Good evening, everybody. This is Mike Vacchi, Princetontrader.com, with your Monday evening market recap. So, look, I don't do the evening ones as often as I did years ago, but we're going to start doing them again. And the more volatile it gets, the more I'm going to just be right here by your side and talking you through it and trying to get a little bit of a sense of where we've been and where we're headed each night. So let's dive right into it. Start with the daily chart. And so, like we talked about this morning, we were stopped at the 5% limit down on the futures heading into the opening bell at 9:30 Eastern time. They immediately, boom, 7% limit down, 15-minute halt. We weren't open. Then the issue was, were they going to go down and hit that next automatic breaker, which is at minus 13% down? They tried. They got to about 12.7%, hit that 2350 level, and they started to rally it up. And ended up with a nice little move to the upside over the course of the day. So let's go to the hourly chart. So, they come down, they hit 2350, they defend it. They take it up as high as 2550. So, 200 handles off the low. And, falling back on my rule of 10, and for those of you that are new, welcome. We had a lot of new folks in the last few weeks. A lot of folks are in and staying with us. So my rule of 10 is when you get into hyper volatile markets, and this is a hyper volatile market, you can think of any particular move on the S&P Futures as a typical move by dividing by 10. Okay, so we tend to get stuck in 20 handle or 30 handle chop zones, which sounds insane. It's 20 or 30 points on the index. If you divide it by 10, then you're talking about a 2 or a 3 handle chop zone, which really, if you take the numbers out of it, is a little bit more typical of what you would see, market behavior wise. So basically, we came into 2350, we bounced to 2550, a solid 200, or in using the rule of 10, 20 handle bounce that they defended. And then they wound it back over the course of the day and closed near the lows, but you've got a higher low here versus this 2350. Now, with everything going on in the world, we still have not come all the way back to test the lows from Christmas Eve of 2018. So what I've said to a number of people, both retail and institutional, is look, can we get back to the December 2018 lows and then make some decisions there about what this thing really wants to do as far as getting back into those 2018 prices? Or, are we just kind of retracing this really big, 14-month move? And it's been a heck of a move. Back to retest some known support. Maybe we, can hold that area. And as things improve over the course of the global landscape, you can see, some kind of a rally. I would expect that we're going to get down into those levels this week. I would suspect we're going to go below them. What I would be interested in is when you test those levels from underneath, whether they become resistance or whether they go ahead and give it right back up. I was also saying I don't expect this to be a V bottom. It's just not. That's just not the way this is all playing out. This thing's going to have to find its footing. They're going to try some bounces. Those bounces are going to get rejected. Lower lows are going to happen. And let me underscore that we are nowhere near globally where we need to be to start that conversation. Everybody would love today to be the low. We would have loved 3 or 4 days ago to be the low. But the environment is not there for that just yet. Going down 13 or almost 13 on the futures and bouncing it, you're going to get these bear market rallies. What I would say to all my traders out there is what I told you guys forever about bear market rallies. You can be long a bear market rally. You can stand aside on a bear market rally. You cannot short or be stubborn short bear market rallies. They will rip your face off. They will go farther and faster and longer than you would ever want them to go. And just when you're ready to give up on it, just when you flip long, then it's done. Down we go, lower lows, which, takes a toll on your account and takes a toll on your brain. And neither one is good. So what are we doing tonight? We're not doing anything. And the other thing I would say is, like I mentioned this morning, when we're limit down, I'm not in the market. I am not playing Russian roulette with limit down. I never have. And with the variety of platforms out there, with the variety of ladders and depth of markets and charting systems and brokers and all of the technology that gets played into all of those various scenarios, you've got to feel pretty good about the price in front of you. You got to feel pretty good about your execution platform in situations like that before you go ahead and dive into the market. So we didn't do anything until they halted, opened at 9:45. We took our first trade right around 9:50, 9:55, and by honestly, we did a short from 24.37 and we long 24.40, and by 10:15 in the morning, 10:30 in the morning, the day's over, the week's over, it's all over. So for those of you that are day trading this stuff, you've got to be patient. There is more than enough time to find the correct part of the volatility. You don't have to feel like you have to be in on the lows or in on the highs. If you catch the meat of the move, don't be greedy. Take the profits where you find them. Let your runners work. Roll up your stops. And on the exhaustion of a move, then you're done. You're done. And be done. Don't keep dipping your toe in, because if you're not using disaster stops like we do, we use 5-handle disaster stops on every trade we take. If you're not using disaster stops, if you're being careless with your trades or careless with your execution or careless with your stops, don't be one of these people that puts on a trade, walks, goes and gets a cup of coffee, comes back, and their account's blown up. Because this is the kind of tape that'll do it. Respect price. Respect risk. Respect your account. Respect the environment that you're trading in. And always, always live to trade another day. So, as we head into tomorrow, we're bouncing a little bit here. They pushed it down back into that 2400 area. They bounced it at 2400 earlier today. I had 2400 as an open area from in and around 2500. And we had a couple of nice short markers on the way down from there, neither of which I really took advantage of. But they were there for the subscribers if they wanted them. I didn't really do much in the afternoon, and we had a 100 handle day, and I was basically done by 12:30 in the morning. As far as tonight goes, I think we got to focus pretty hard on the 2400 area. You see the daily pivot, that's the dotted line here on the chart, 2466.5. And if they really get rolling, well then, you got 2550 to contend with. I would stress that I would not, just don't do anything in this market that you don't have a clear understanding of where you're wrong, or a clear understanding of this is my bottom line, this is my disaster stop to get out. As we head into tomorrow, it's going to be a pretty whippy choppy open. And for me, whether or not we can do those December lows, whether or not we hold in the 2550, one of the healthiest things that could happen to this market in this current environment is if it can settle into some kind of a trading range. Even if that trading range is 200 handles, okay? 2350 to 2550. If we bounced in between that area for a few days while everybody caught their breath, I think that would be really healthy for the market. Really, really healthy. And I think it would stop some of this discussion of whether or not the markets should be closed, which I have never been an advocate of, except in, extreme circumstances. And I guess these are extreme circumstances, but there's a lot of ways to run a market. And I think keeping the market open and functional has its own steadying benefits out there generally for everybody. So I will catch everybody in the morning, and I'm going to do more of these. I think at night it helps to come on and just kind of reinforce some of these trading points that we've been trying to talk about in the room all day, and to open that up for people that are just out there that are not in the room. I wish everybody the best. Be safe. Take care of your families. All the best to everybody out there. Take care. Trade them well. I will talk to you guys in the morning with a market webcast. All right. Be good. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.